Hey everybody, we are going to revisit Howard Hughes Holdings, specifically the company that Bill Ackman wants to not really take over, but definitely, acquire a bigger stake in and have more control over. And he says he wants to turn it into a modern day Berkshire Hathaway. We're going to dive into the latest developments. There have definitely been some. Um, Before we dive in, please take a look at the link you see on your screen, fool.com/Frankel. It's also in the video description. You can get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. All right, so without further delay, I want to go ahead and share my screen. All right, so just recently, Howard Hughes Holdings management or board of directors announced that Ackman's offer, it's not acceptable in its current form. Now, we don't know if that means that he wants to acquire too much control for their comfort, if the price he's offering for newly created shares is too low, or whatever the case may be. But whatever it is, they are not accepting the offer in the current form. But one thing to really keep in mind is that they are leaving the possibility open for a deal in the very near future. There is now what's called a standstill agreement in place until March 13th to discuss alternatives. Now, if you're not familiar with that term, so a standstill agreement, it's generally a form of business agreement that's common in merger and acquisition talks. It prevents certain things from happening. We don't know the exact terms of the standstill agreement between Howard Hughes and Bill Ackman, but some common provisions that you usually see, the shareholder is prevented from acquiring additional stock. Remember, Ackman owns about 37% of Howard Hughes right now. He wants to own almost 50%. So this agreement likely forbids him from just acquiring shares on the open market. It might prohibit him from making a tender offer directly to shareholders, and a few other things like that. So it pretty much just says he can't do anything for the time being, and needs to, come to the negotiating table. So I also want to get to the current state of Howard Hughes' business, because this is kind of important and it kind of tells why Ackman wants this. I've done videos on Howard Hughes before. The general idea is this is a real estate company. It's a unique real estate company. It's a developer of master plan communities that are, the scale of like large cities or medium-sized cities almost. A lot of people think the Woodlands right near Houston, Texas, is its own city, but it's actually a Howard Hughes developed community. Same with Summerlin in the Las Vegas area. So the general model is Howard Hughes buys some land, sells some to home builders. They develop neighborhoods. That creates demand for commercial assets, which Howard Hughes builds and collects rental income. The presence of those assets makes the surrounding land even more valuable. And this cycle of value creation can continue for years and years and years. So just to see where the portfolio stands right now, they have about 7 million square feet of office space, which has been the biggest drag on the stock in recent years. Almost 3 million square feet of retail space. They own 5,855 units of multifamily properties. They have sold over 3,000 condos in their history. They have 7 active communities right now, about 35,000 acres of land. And this is a big operation here. So just to kind of show how the company makes money, there's 3 ways it makes money. It has its master plan community segment, which generally consists of the land sales. In 2024, earnings before taxes, $349 million just from that. Strategic developments, the condos, the Ward Village in Hawaii is its big condo project. So in 2024 alone, it generated $779 million from condo sales. And those are pretty much at like a 25% gross margin or so. It's a good business. And then the operating assets, the commercial properties it owns and charges rental income. Net operating income last year was $257 million from those. So here's just kind of an overview of the company's main communities that are active right now. There are 3 of them in Houston, so they're all combined here. The Woodlands is the big one. Bridgeland and the Woodlands Hills are newer and smaller. But combined, they have over 40,000 acres of space. Over 150,000 people live there. Houston is a rapidly growing market. I mentioned Summerlin in Las Vegas, 9 miles from the Las Vegas Strip. That is 22,500 acres 130,000 people live there. In the Phoenix area, this is the newest and arguably the most exciting one. Howard Hughes bought 37,000 acres and plans to develop a 100,000 home community on it over time. This is really the first big, large scale one that the company in its current form is developing from the ground up. I'll get to that more in a little bit. I want to show one more thing here. So the office, multifamily, and retail are the three main focuses of the company's operating assets. Office makes up the most in terms of square footage and in terms of net income. And this is a type of property that is kind of worth watching. I'm sure you're familiar that the work from home trend has been pretty big in the past few years, and office valuations, just as a result of work from home and interest rates, have really not done well. So that's something to watch. That's why the stock has not performed that well in recent years. But let's just take a look at Howard Hughes' results real quick. So you can see the net operating income. This is when Howard Hughes went public. It spun off from a company called General Growth Properties in the wake of the financial crisis. You can see how it has, net operating income has, almost 6x'd since the early days. Land price appreciation has been impressive. Since 2017 in Summerlin, the average price per acre is up 144%. In the Woodlands, where land is kind of running out, you can see the land values have skyrocketed. And in the newer Woodlands area neighborhoods, it's been less dramatic, but still impressive rises in land value. Cash flow, the company is cash flow positive. This is one of the reasons Ackman is interested in the business. So the left-hand side right here, this is the net operating income from the properties that it owns. This is the money it's going to be making from the master plan community business, and then subtract its interest expense right here and other business expenses right here, and you get about $350 million of expected operating cash flow in 2025. And the current strategy, and this could change if Ackman gets his way, is to invest in future developments, opportunistically buy back shares when they're cheap, and to slowly pay down the company's debt, which, as you can see with a $206 million interest expense, it does have quite a bit of debt. Not uncommon for a real estate developer. And the current state of its master plan communities, this is just how much land is remaining. I mentioned in the Woodlands, land is starting to get scarce. Less than 800 acres remain to develop there. This has been going since 1972, so this is definitely a later stage one. Bridgeland is close to the Woodlands geographically, but is much newer. You can see started in 2010. It's currently being developed and has a little bit more land. Summerlin in Las Vegas still has a lot of undeveloped land, even though it started back in 1991. It's just a massive community. And Teravalis is the community it just acquired in Arizona. You can see it acquired the land in 2021. It just sold the first lots to home builders last year, is expecting to open to actual home sales this year. And you can just see how long the cycle of creation is here. It's not expected to be fully built out to 2080, so it won't be built out in my lifetime. But that's kind of the point. This is a long-tailed kind of value generation business. So speaking of that Arizona neighborhood, I want to get to that. There you go. So Florio is the first part of the neighborhood. You can see the pictures here. There's already roads there. It's starting to be developed here. 7 home builders are already contracted in the area. They've bought a little over 800 lots so far. So we'll see how this plays out. It is starting to take shape. This should be a very nice cycle of value creation for many years to come. And you can just see the undeveloped acres. This is how this breaks it down by residential and commercial. You can see the Woodlands, as far as residential, is almost totally built out. Commercial, it should have a few more years to go. Woodlands Hills has about 800 acres total left. Bridgeland, I already mentioned, has significantly more. It's one of the newer communities, but a lot of future potential here. Summerlin, more residential than commercial by far. Summerlin has the most, in my opinion, the most impressive commercial assets in the portfolio. And Teravalis, you can see it's just getting started. A ton of over 27,000 acres of land still to develop. So really impressive here. I want to quickly share this one. This is from their latest investor presentation. And this is why Ackman is interested in paying a premium for the shares. This is the current net asset value estimates here as of 2024. And this is designed to be a conservative estimate. This is the value of operating assets per share, meaning the commercial properties it owns. Master plan community assets, that's the company's land and things like that. The condominiums, the Ward Village project, per sale minus the corporate. So this takes debt and things like that into account. So this is a sum of the parts value, and conservatively, they get about $118 a share. As I'm recording this, the stock trades for about $75. So it's trading for a significant discount. It's not quite 48% right now, but a pretty big discount. Remember, Ackman's latest offer called for a $90 valuation for the newly created shares. If they don't accept it, I'm actually fine with it. I'd fine owning this company at such a big discount. I think it will have a lot of tailwinds as interest rates start to fall, especially in those office properties. But this is why the company says Ackman's offer that it doesn't quite cut it right now. So yeah, hopefully you found that informative. I'll do my best to answer any questions you might have individually. I'll keep you updated as this plays out, and thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.